All right, let's talk a bit about gold prices. Gold prices are down substantially following yesterday's news of a new COVID-19 vaccine. Silver prices also down a bit, and crude prices are up. So let's check out today's market update, and the focus is on commodities. All right, so this is gold prices. We had a very substantial slide yesterday, and for now, we need to be careful because it looks like the correlation between positive stock markets and gold prices have been broken. Why is it like this? Well, firstly, both gold prices and stock markets were going up on the idea that we were having market stimulus. So you had all the QE, you had all the fiscal stimulus as well. But what's happening now with the COVID-19 vaccine around the corner, realistically, we're probably not going to have too much more fiscal stimulus. We probably will have some, but at least in the short term, there's going to be less of demand. And as well, anybody out there that is sort of projecting the end of the world, now it doesn't look that likely, right? And and that is causing gold prices to slide a bit. So what's the game plan here? Well, overall, from a purely technical perspective, we're trading sideways. We are. But the little uptrend we were working with here, that got, killed off. And we started trading sideways. We're within this rectangle, which doesn't look too much different to Euro USD, really. And this is, to some extent, this unusual pattern. And I know it's not perfect. In fact, this is more of a descending triangle. Descending triangles are bearish patterns, by the way. And this is really what it's telling us. It's telling us that if we trade below this point, we could slide by some 6.5%. So that is the biggest risk here. And if you look at this level here, we're still dealing with a downtrend. And I think if we do swing up to something like 1913, then people are probably going to sell here. But I'm a bit reluctant to be really bearish from there. I would prefer just to sell on a break to 1847. That should give us a slide to 1814 and 1791. Silver prices, they are bullish now. So I had my buy area much lower here and it didn't slide enough. Like silver as well is used in like industrial use, higher percentage than we have with gold, and that maybe explains why this remains bullish for now. And for now, it remains bullish. This is the buy spot. So if you wanted to buy something, I wouldn't be buying gold because it's cheap. I would buy silver because it's slid. That's what I would be focusing on. As for crude oil prices, they had an amazing bull run here. So we're bearish on the way down, right? And then had the election. Things get a bit messy as they usually do. And now we're dealing with an uptrend. Here, this one has always been a market that was heavily influenced on the back of COVID-19. And we're still heading for a second lockdown, and we're already in a lockdown in Europe. Like right now, I'm in London, and I'm only allowed to go out to do like necessary shopping, exercise, and I should really stick in my area. And that's really the rules for everybody right now. And I think this will continue to influence things. But from a technical perspective, you do have a bit of a bullish bias. As long as you trade above something like 37. It makes sense to be bullish. Might come down a bit to 38.81, and some people might buy there. You might also see a break to 41.56, and that might trigger some short squeeze to the upside. Okay, good. That concludes today's commodity market update. Don't forget to check out the other videos we have on the channel. I uploaded a video on currency markets, and I uploaded a video on stock indices. You want to check those out. Thanks so much for watching, and don't forget to subscribe for more videos like this. See you guys soon. Bye.